Welcome everyone to Sunday Fuel, the Sacred Prophet Sunday show where we take a look at the trades from the past week and see what kind of setups we have for the week coming ahead. I'm one of your hosts, Tom Hartman, your programmer and strategy developer extraordinaire, alongside, as always, Peter.
I'm not a host though. I'm just some guy.
I said alongside with. People can put air quotes around hosts
You
there.
said one of your hosts, okay? That's what you said.
That's true. I should correct that.
Yeah.
And Peter, edit that out and just put like a sensor over my mouth and then make it very clear. In fact, I should just put you small and to the side.
Why am I
What are you
even
doing?
here? Yeah,
What are you
I
even
don't even
doing in
get it.
there?
That's right.
Exactly. Is there any way for me to I want to do the whole CoffeeZilla type thing where I have two cameras, and that way, like, I'm just talking to myself and talking to me, talking to myself, and sometimes I'm talking to a robot that's also me. Wait a minute, what are we doing? That's the show. That's the show.
I don't get the whole aside thing. Like why? Anyway,
Because it's you from another angle. I get it.
sure.
Oh, look, my trade is already going against me here. All
What
right,
are you
let's see here.
shorting? What are you shorting?
I'm long actually. Well, that's the debate I had for the trade. Um, as we know, the trades get set up based on a series of volume-weighted moving averages that we pay attention to. And so, let's just take a look at the last week that we had because it's been pretty. I mean, the beginning of the week was pretty textbook. So let's go to the 2 hour chart, and we'll see here that what was last week. 1 second. So last week was the second. And so the week started, and the idea was that the price would go up to this level over here, right? So we started over here where we were filming, and then the price came down to towards this level, which is what we were expecting. You guys know that I've been having this bias towards the 88, sorry, the 88 level over here. Do you remember, Peter, why this would be the level would be aiming for?
Nope.
Because the price never touched it. It never came back and touched it.
All right.
And so these two levels have been unmitigated. And so we're moving along. And when our last week started, um, we were so the previous week we were going to head down to over here because we had this level that was unmitigated, and then let me just change it here. This level was unmitigated, and then this level was unmitigated as well. So as we were moving along, we had this bias towards the bottom because after we cleared this level and this level, there was no more levels at the top to go towards. So we sort of have to like build up now momentum again in order to get there. And so once those were cleared, then I knew, okay, we're gonna have this bias down towards this level, which makes sense because we have this purple. Well, let's call it a moving average, not exactly moving average, but it's a moving average here where this has been acting as long-term support. So if we take a look at our chart, you'll see here that let's just hide you and you. So we see here these levels are where um, orders are accumulating. Expectations of orders are accumulating, and so usually around this purple level, the long term position is this fuchsia one down here. That's where, generally speaking, we're not going to go much lower than that. But then, what actually carries the momentum from month to month is this average over here. What's the name of that average again? I gotta memorize these averages, Peter. I keep
I
forgetting.
don't think you ever will.
Seasonal. That's a seasonal average. So consider this almost like a 3 month average. So over here, while we were below it, so the last run up that we had. So if we take a look, let's say from the beginning of the bull market, the price climbs up and then it came over here and bounced on that seasonal average. And then it came back down towards a seasonal average again. Here it broke below the seasonal average, and then we sort of stayed in this volume area, and there's a lot of buoyancy there. So then the price jumps back up. So this is where you get your buildup of orders, so that you can get these runs up. And then when it did again and it petered out, once the orders over here petered out, well, then it came back down to this seasonal level again, this purple line. It gets the orders that it needs. It goes up and then it goes sideways. we get back to the level again, and that sort of thing. So these levels here are acting. This purple level is acting like a magnet for the price, where orders get pulled in. Here we had this nice big consolidation area. We came all the way down to the main long-term trend, grabbed orders, and then moved up. That's exactly what we did. And so after this move up over here, I was expecting we'd be moving sideways. And at some point, we got to come back to this purple level to pick up orders, which we did. We came back over here at the level. So the question is that enough to get us moving? And my concern is that we have two concerns here. One, we still have these mitigated level. We still have these levels that have not been mitigated yet. So that's over here. So we still have here and here, and it has not been mitigated. And also, the big concerning thing is liquidity. So one of the liquidity indicators that we have tracks the availability of dollars within the system. Get rid of order blocks.
You can move us if you need to, or get rid of us.
Oh, yeah, that's it. So this purple line is the liquidity for the concurrent liquidity right now, what's being pumped into the markets right now. And then the yellow one is offset. So if we offset our liquidity for about 12 weeks, about 70 something days, then that's mostly what the chart is reflecting, right? Assets that are highly correlated with liquidity are generally lag in liquidity up to 12 weeks time, sometimes even more than that. And so liquidity gets generated at the source and then flows through the system. Does that make sense to you, Peter, when I say that? Like, liquidity can be generated now, but then only show up in Bitcoin weeks from now?
Yeah, absolutely.
Okay. So I do both. I do this offset because it's almost like the difference between the two offsets is what the true liquidity is right now. Because then there's always when the liquidity is starting to pick up or diminish, there are orders that are starting right now, right? Some people start placing the orders now to get in, taking advantage of that liquidity, whereas the liquidity, when it actually hits, can have that 12-week lead time. So we get this movement. So we had this jump up in liquidity, this purple line here, as of January 21st, while we had this drop in liquidity, the lag liquidity, over 12 weeks. And so we got this weird effect where we get a run up higher than the previous high over here. We get a run up that's higher on this lower high, but so while we have this descending, so the lag liquidity is descending. Meanwhile, the concurrent liquidity is rising. So that makes it so that we didn't go down as hard as I thought we might, right? Because we're buoyed a little bit. So we had this weird situation where we were essentially consolidating for half the week, right? You see these dojis over here, these doji candles.
Yeah,
this is indecision, and today it's like now it's making the decision. Just as I went long, because
why would you go long there?
Well, there's even though we're short on the daily, if we go back to our 2 hours, we're near this level. So you can have a correction in price where the price drops significantly in order to wash out some of the positions, and then we can consolidate and move up. But then you can also have a correction in time. This is something that to learn the hard way, that sometimes, even though the price that I'm looking for is this level over here, which it might still get to, it still might get to the 88. The longer the price sort of bleeds out sideways, that's almost like if it went down sharply. So
Why?
you get this bleed out. Now you could have the opposite effect where that's actually bleeding out all the long positions, all the bullish sentiment, and then it really tanks and rolls over. But in a situation like this, I don't really mind being positioned for the long side because if it does roll over and fall, fine, I get liquidated on my positions that were long. But the upside potential for long is massive, right? If what's happening over here
Why can't you
is
just wait until it starts to turn up? Why try to time the turn?
I time it with half positions full or full position. It doesn't need to be significant. I like to generally be exposed to the market because these moves that happen like this, where you get these blast offs,
Mhm.
right? They always happen with these dips, right? It comes down, then blasts up. It comes down, then blasts up.
So how do you know that the down move is completed and it's not going to blast up?
That the down move is completed and that it's not going to go. It's
Yeah, you
not going
said
to
it
blast up.
turned against you, so it's going down. I see the red candle, and then, but what makes you think it's not going to blast up?
It could. That's why I'm long.
Oh, I see.
And we are near. We are near. So one of the things I look at is that, and this is what waves is good for. This almost gives me a timing for the consolidation over time, where as it's consolidating, this line is moving up, right? Even though we're going sideways in the price, it doesn't mean that nothing's happening. It means that we are moving forward in uh that's still the this long-term trend is coming up. Let me just switch this because it's
And
not
those are
showing
orders that are
this.
waiting to be purchased. You said at that level.
Exactly. So this can act like the supports that we wait for here. And so once this guy passes the 88 level, the further it goes up past that level, the less likely we are to get back to that level
Okay.
because this
I
is
can't
acting
see
as
when
its
your
own
mouse goes
support.
there. Just so you know.
Oh, sorry. Yeah. The
So say that again.
over here, our 88 level, as this is headed upwards, if it actually passes this level over here, we reduce the likelihood that we'll get to this level
Right.
because this is now acting as some sort of support. Now, it doesn't mean that we don't break, that it can break. It just means that if it does break, then it's far more likely that this guy is going to head down pretty dramatically. Um, and so I like betting on the long side because if I miss the downside, I always have the long side to look forward to. But if I miss the upside, then I don't have the downside necessary to look forward to because it's not very clear when the price is moving up into blue sky territory where it stops.
Right.
So I don't mind taking my long now. And if I'm wrong and this breaks lower, let's say this breaks down towards we're going to be headed towards the $74,000 level. Fine. At some point, this will bounce back up. I could take my short again there and then move down and then just take my profits downwards. So I don't really mind so much about that. Also, this is dropping while we are waiting for our weekly trade to happen, right? So the weekly trade starts around between now and around 8 p.m. Eastern Standard Time. You'll notice that here from this red bar. And so what we're getting is that we're moving towards there. So just like over here where we had this red bar, right? This red bar over here, and then the price sort of moves down, and even on it moves down drastically to a level, and then it moves back up. This can happen here. So once this candle closes, once we're closed at 7 p.m., we can see already that our target price for the week will be here. So that tells me that not only do I have this to look forward to if we bounce to move up over there, but that we also have a bias towards the upside.
And what's that level?
This level is 97, call it 97.4. So because I know I'm going to have that bias anyway, even if this is going to be a downtrend, even if we are headed lower, the price should still get there at some point, or is likely to get there in the same way that even though this was the downtrend, we did move up to our level for the week, and then we bled out. This is what I love about our strategy, right? So you just get these moves where these levels that I'm pointing out over here, let me just zoom out, these levels that we're putting out over here, we just get we just get to. We're over here, and the idea is how we're going to get down there. Well, we got down there. we get this another level over here. How are we going to get there? Well, we're going to get there. And it doesn't mean that the long-term trend doesn't move the way that it needs to move, but we get these bounces. Same thing over here. The price moved literally, I think it was in 1 day, in a couple of hours, it moved right up to our line, and then it bled through. So like I was able to get the short. I was able to short all the way down here, actually all the way down to where I reversed my short over here, which is another reason why I don't mind then closing that position where I did 200 or 300%. I can't remember what I did. That was a 5% move. So yeah, 250% gain. So then I peel off one position, and then I put it back on. And one position, it's going to risk 1/50th of that. So it's not a big deal. So what I'm looking forward for this week is, like I said, this bias towards this level. If we get to this level and we stay underneath here, just like we did over here and just like we did up over here, if we stay beneath it, then we are
can't see everything.
Just like over here, where this is our level and we moved up and then came down, and then this was our level and we moved up and then came down. If we move up to this level that we're waiting for here and then come down, then we're certainly headed to 88, potentially 74, and we're going to ride the short pretty significantly down.
I hope we get down to 74. I want to buy some more.
It would be great. I would love to get down to 74, but what's bothering me is our liquidity levels, and so
Trump will fix this.
So all I know is what the liquidity is saying, and because we have this 12-week lead time, we don't have to guess. Right now, in this area right now, so Trump got elected January 20th, and then liquidity started pumping up a little bit, and so that we know that later on, around April, there's going to be a bounce that is affected by the liquidity that we're dealing with right now. Oh, my mistake. We're going to have a bounce that is affected by the liquidity that we have right now. So basically the Trump liquidity that's been added when he got inaugurated, that little bit of a bounce is going to happen in April. Just like we're having a bounce, potentially we're going to have a bounce over here. That this is one of the reasons why I went long, is that we have this up move that should equate to about an 11% bounce on Bitcoin that would go from wherever we are right now to around 106,000 on Bitcoin, at which point I would be selling my position going over. And that sort of coincides with...
Oh, you don't think we're going to get all-time high?
Well, we can't. Unless there's something drastic that happens with liquidity, we can't get that because we're not getting this up move in liquidity. Like, so we're just consolidating.
This banana zone is not happening?
It could happen for one other reason. I'll show you in a second. So over here, so one of the things I look for whenever you have these price predictions is what are other levels that are coincided around that part. This might be a little bit crazy, but let me show you. So we have here.
You sure you don't want to expand the chart?
Yeah, I'll go back over here. So we have here these 2 points. So where the candle wicked down here on the 13th and then on the 2nd or something like that. So these areas here, this forms a channel level. And then if we take a look at the parallel level at the top, we had a previous level that we're looking at, which is over here. And then you could even connect this top over here. So we have this channel that's happening, this wide, broad channel where the price moves down over here, up over here, down over here. And so we could potentially go up towards over here, right? And so a move like that, this would be coinciding right around where you see this purple line. This is always my ticking clock. These waves are my ticking clock. Right around here is where I would expect to bounce. This is why I was telling people in our crypto group, 92.9 is where I was expecting to bounce, which looks like that's where the price might be going. Fine. And then a move up to, where is this? This is up to, it says 110. It could go all to 110. I feel safer at a lower high at 106 because even though this price over here went higher than this price over here, you'll notice that the wick, this actually closed over here, and this one closed up here. So this is actually a lower high, even though the wicks went all the way up. I sort of don't really count. I count the wicks when it comes to channels, but I don't count it as my price target because that's like it got launched because of liquidation, because of news or whatever. You can't necessarily guarantee that. So if I were to take a look at this, if I was going to expect this level, I would expect this drop over here. So this is where I would expect resistance. So I would expect the candle to rise up to around over here, where it's meeting this level here of resistance, and then comes down lower. And I don't know if we go down below this level or if we go down further still. So I feel safe with a long up to 106. But this is not our strategy, right? Our strategy, we're not betting on. We don't make our big decisions based on trend levels. We just use those as confirmations for our volume weighted average price. So I'm not the only trade I'm really paying attention to is our weekly trade, which should be over here at 97.4, and we're looking for how the price moves accordingly. So the things I want to pay attention to, if we do break and close below this trend at 91, let's call it 92. If we close below there, like the price has actually closed there for on the daily, then that's pretty much confirming that we're headed down to this 88 level. Then we should expect a bounce right around here, around this level. Should expect a bounce. If we break below there, then we're headed down towards this level over here. But we're gonna have plenty of notice. I really don't expect a wick down to that area, but who knows? But I'm not expecting that. One thing also to note is that just to close up the conversation on liquidity. So over here we're in the zone here of this liquidity lull. And so the current liquidity, the live liquidity is sort of consolidating sideways. It hasn't dropped. And our lag liquidity is headed up. So I'd be very, very, very surprised to see a move down. I mean, look how strong this wick was. This wick over here and this wick over here. The wicks tell us how strong the move is. Like how strong the upward bias is, or whatever that wick is. Yes, we also had a big wick over here. But this is telling us that we should be staying around this area. That's generally what's telling us because of liquidity. And that's what we're seeing here, with a bias towards the downside because the liquidity is headed down. So we'll see what happens. There is an issue here of, actually just take this off because that'll be it for that. There is an issue of where the next liquidity is going to come from. We were paying attention on the January 29th Fed meeting, what Powell was going to say there. And he said they're pausing. They're not cutting more right now. It made sense. The market was pricing that in, but also nothing in the data was showing that they should cut. There was no emergency they should cut for. There was this question of would Trump insist on Fed cuts? And if you guys actually go take a look at my video on with Mike Christensen on Traders Pulse that we did last Friday, I go into all kinds of details of how Donald Trump seems to want a strong dollar, seems to not want to cut, seems to want to do legitimate things in order to lower long-term interest rates on the 10-year, which doesn't lend itself to short-term gains within the markets, which sort of makes sense. He's a second-term president. He doesn't need the market to be at all-time highs if what he wants is legacy to make sure that the economy is actually doing well when he actually leaves. What he should do is what he's doing now, cutting spending, domestic programs, increase GDP, eliminate trade deficits, the sort of nationalism, protectionism, which is not good for Bitcoin to the moon. So what we can expect is one of two paths where.
No, wait, they could do the reserve. If part of what he wants to do is to fix the debt and all that stuff, wouldn't he adopt a Bitcoin reserve? Don't they have to make the Bitcoin play in order to save their country?
The Bitcoin play is not I don't really know why people say this. It's not a net bullish on the asset. Like, just because they're going to, first of all, the reserve they're going to create is going to come a lot from the Bitcoin that they've confiscated. There's no net buying, right? So people would think like this is going to be like Michael Saylor's MicroStrategy, where the government is just gobbling up a bunch of Bitcoin and the Bitcoin prices go to the moon. Not exactly. And
No, but it's going to start the other countries are going to get their 2% reserve, and isn't that what you talked about?
sure, but if we're talking about our trades that are week to week, month to month, maybe quarter to quarter, that's not happening now. That's just not going to happen now. So before he did put out a call for I forget to whom, but to provide guidance on how they should be doing the strategic reserve, if they should be doing it, what are the impacts on the economy and stuff like that. And he gave them 180 days to provide the report. So then you have to assume another 180 days before the earliest before a bill is actually issued. That needs to be voted on, and then it needs to be ratified by the Senate, and then it actually needs to be put into place. I don't think it's going to executive order a Bitcoin reserve. I don't see that happening. And so you're looking at a year and a half, 2 years, the soonest before that really comes into play. Fine, people front run that.
So
you still need liquidity. You still need liquidity for it. So the actual concern right now is that as we're heading now into this window of weakness for the economy, like I showed you, the liquidity is low. We're not off a cliff, but it's consolidating sideways. If we're in that period of weakness and then something happens, some external exhaustion shock happens, then we get a nice buy the dip opportunity, because then they would have all the reason in the world to come in. Okay, we need to pump up liquidity and move forward. I think what's going to happen, what I hope is going to happen, is that the tariff issues are settled with the different nations. China's the dollar is allowed to be devalued. China gets out of the recession, and then boom, we get this boom up. Raoul makes this case from the slides he released recently from his GMI report that liquidity is about to turn up banana zone style. And fine. I'm just going to wait for what my volume weighted average price says. If that's going to happen, then we're going to climb out of this red zone, and then we'll blast off. These things don't happen just out of the blue. We're going to see the levels that we're paying attention to, and we'll be able to catch that wave. But there's no point in like long-term bet on that. If it's going to happen, it's going to happen. If it's not, it's going to not, and we can make our plays accordingly. But every drop, great buying opportunity, right? Every 30% down, you definitely want to be buying then.
So how does your signal help in this situation if you're just buying it when it drops DCA or something?
Well, that's for your long-term holdings, right? So what our strategy, we're dealing with a 50x leverage Bitcoin play. We can't be betting on tweets and promises, and I think now is the time. When the chart says, when the levels say, hey, this is our target price, then we're going to use that as our target price. And at some point, what's going to happen is that we follow this religiously, and then once the liquidity changes, we're over going to be in a long. And then we ride that long up to the blue sky levels. That's what it is. We don't have to rush. It's day by day, week by week. Peter, I can't believe it took me so many years just to wrap my head around this. I keep thinking to myself that the chart moves, Bitcoin chart moves 15% up. And I get confused by the narrative or used to get confused by the narrative people would have that's like, oh, retail investors are really in. Oh, you're for what it is that big money, big institutions, they step into their positions. If they're going to buy $50 million worth of Bitcoin, they're not going to buy it all on a Tuesday. They have to buy it over time. And it really clicked for me. I knew this theoretically. This is what we based on the strategy on. But that clip from, I got to say that clip from Michael Saylor in the interview, when they ask him, journalists ask him in the middle of this whole conversation, hey, aren't you going to be like moving the price of Bitcoin? And he says, no, that either they're using an agency or something like that, and that they hide the purchases so that it doesn't dramatically move the price of Bitcoin. And I was like, that's the VWAP. That's exactly what it is. They're buying when the price dips down towards VWAP. They buy there, and you go, why did the Bitcoin price bounce exactly off this level that Tom's talking about? Like exactly. How did it just bounce from over there to where he said? What is going on? It's because it's some guy's job to sit there who has nothing to do with narratives or meme or anything like that. And his job is, I got to buy some Bitcoin, and he has to press the button and buy Bitcoin. And he has to buy it at that level. Because if he buys it at a level that's not that, he's got to pay the difference. Can you imagine that? You get a $50 million contract to buy some Bitcoin, and they go, you either buy it at the price, at this price or better, or you have to give me the Bitcoin and you have to swallow the difference. Of course, they have a system that's automatically there that's going to be buying at those levels. And it just stair steps. It just stair steps. You're like, this is great. And I've noticed the same thing in gold. I've noticed the same thing in SPY and NASDAQ. It's all kinds of different patterns that exist in there as well. But as soon as you get any asset that has institutional investment or large liquidity, this is what's happening. So it doesn't happen on pharmaceutical stocks, on your ketamine holding or your cannabis. It doesn't happen there. It happens on
Does it work on the
indices, on large purchases, large interest, large liquidity.
NFL, Super Bowl?
No, Peter, there's no volume weighted average price for that sort of thing.
You're not thinking fourth dimensionally, Marty.
We'll see. So anyways, just looking forward to, it's been a sideways week. We'll see if we get we should get to, the target price is 97.4, not super lucrative, but we want to see what happens around that price. We want to see if it breaks above and uses that as support. If it does, hold on to your britches, because I do think we're going to go to around 106. Liquidity is telling us a bounce of about 11%. But if that doesn't happen, 88 is still calling. The level's mitigated and OCD prices. Got to fill that gap. They don't like that gap. So we'll see what happens.
Now do Cardano.
Cardano. So if we could take a look at Cardano. Actually, I haven't done the chart for that. Let me see if I can immediately see it. All right.
Or Solana. I don't know.
Oh, I don't like zombie coins like Solana. I don't like garbage.
Adoption, Tom. Adoption.
You know, also what also has adoption? Haktua. All right, so we have Cardano that is headed towards, it looks almost certainly like we're gonna head towards, we're breaking this. Oh, this is the wrong chart for it. 1 second. Yeah, it's a better one. Okay. Need more data for the chart to work. So it's not good. It's not a good price. We move up towards this it's the resistance level, right? So it broke down over here and made this resistance level here, here, and here. And we hit it again here, and now we're headed back down. We do have this trend that we're following.
Why isn't there a wave at the bottom? Why are all the waves above that line?
There's not enough data on this chart. Let me see if I can get it there. That might be, no, it's not, just there's not enough history on it for me to get it. So it's gonna be forming over time. Let me see if a different chart will give it to me. Let's do USDT. No, I have one of them. No, not there. No, not getting it. That's as much as I'm getting.
All right, it's all good.
So it's not looking good for Cardano right now. We're which is the best time to buy. I know that sounds kind of intuitive, but we did get our bottom just like everything else did at the end of the FTX collapse, Celsius, Luna, 3ACs, all that. And we're moving up. This was the move up because of the Trump win. And I like the stock. I don't know what to tell you. It's very GameStop for me. I like the stock. If we take a look at Solana,
it's not stock, Tom. It's the future of currency.
Solana is making its move
up and to the right.
Well, no, it's also suffering too. It does have its a bottom here, so 160 would be, as long as it's holding that, it's holding the uptrend. But I mean, all these meme stocks always look so fragile to me. Let me look at the weekly.
I call
Yeah,
them
Peter,
stock-
I hate seeing this. When we get to all-time highs and we get this stuff over here,
Mhm.
I know we're consolidating. So maybe we go up and then we break. Certainly can happen. Absolutely can happen. Guaranteed to happen. Buy Solana, hold it forever. But we'll see.
All right.
We'll see.
Anyway, I don't want to keep you.
Please don't.
That's what you say
try to
when you're
spend-
trying to get rid of people on the phone. Sorry, I don't want to keep you. I know you got a lot to do.
I
Then
also
you
am
force-
glad you brought it up. I'm glad you brought it up because I was feeling like this was dragging on. Certainly want to stand.
No, my weekend's wide open. All right.
I don't have anywhere to be. That's why I don't like you, because you don't have anywhere to be. All right, so leave it at that. Thanks for joining, and thanks everyone for watching. 4,000 concurrent viewers on YouTube. It's not a lot of viewers, but on our other platform, just swimming. The chat's going wild, folks. It's great. I can't wait till people come back and see the previous videos where Tom called the price again and again and again and again and again. Of course, by that time, I'll be so rich, I won't need them. So I'll just be like a vestigial YouTube channel that people can go to, just begging me, "Hey, are you back?" I'd be like, I'm sorry. I'm getting my toes sucked by beautiful women. Don't know what to tell you.
Would you like?
That's
to
not my line. That's one of my favorite lines from Signs. Okay,
Oh, I see.
one of my favorite lines from Signs.
I don't-
I'm not for that. And the things I'm in, I would never say on YouTube channel. That's ridiculous.
Okay.
It's nonsense.
I feel like you have a lot to do, so not going to keep you.
Fine. I could read the subtext. All right. So thank you very much. You guys have been watching Sunday Fuel, and we'll be back next Sunday with more fuel. I think we found it. I think that's the catchphrase.
That's not it.
That's the one we're going to do.